SPY versus silver, 2026 to 2032. The 9 to 6 compression cycle. A multi-year rotation from equities into real assets. Flint West reporting. Pinpoint brief thesis. From 2026 into the early 2030s, the SPY to silver ratio compresses from around 9 toward the 5 to 6 range. Not through collapse, but through rotation. Stocks do not have to crash, they just have to slow down while silver moves faster. Section 1. The setup. The ratio already told you something. From the 2021 highs to early 2026, SPY versus silver has rolled over hard, breaking structure, losing momentum, slipping below its long-term trend. That move was not random. It marked the beginning of a shift in leadership. Now we are no longer asking if the ratio can fall. We are asking, how far does the compression go before the system stabilizes again? The answer is no longer 2 to 3. That was a poetic extreme. The realistic zone is 5 to 6. Section 2. What drives the compression? This is not about panic. It is about pressure. Three forces are converging. 1. Energy shock and inflation floor. Geopolitical tension, especially around key choke points like the Strait of Hormuz, introduces a persistent risk premium into energy markets. Oil does not need to spike forever. It just needs to stay elevated, long enough to anchor inflation above target. That changes everything. Higher energy costs lead to higher input costs. Higher input costs lead to tighter margins. Tighter margins lead to slower equity growth. Stocks do not collapse, they stall. 2. Global capex cycle quietly restarting. Under the surface, the world is rebuilding itself. Parallel supply chains across the United States, Europe, and BRICS-aligned economies. Defense expansion, energy infrastructure, artificial intelligence and data center build-out, post-conflict reconstruction zones. This is not one boom, it is duplication of systems. And duplication is commodity intensive. Copper leads early, silver follows, because it sits at the intersection of industrial demand and monetary relevance. 3. Capital rotation, not capitulation. This is the key shift. Money does not disappear, it reallocates. If equities are delivering 4 to 6% and real assets are delivering 8 to 12%, capital begins to move. Not violently, but persistently. That is how ratios compress. Not through fear, through relative underperformance. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. Section 3. Why silver leads. Eventually, in early phases, industrial metals like copper outperform. But as the cycle matures, inflation remains sticky, real rates struggle to stay positive, monetary hedging demand returns. That is when silver accelerates. It inherits both flows. Industrial demand from electronics, energy, and artificial intelligence hardware, and monetary demand from inflation hedging and hard asset exposure. That dual engine is what allows silver to outrun SPY over a multi-year window. Section 4. The path, compression, volatility, reversion. This is not a straight line. The cycle unfolds in phases. Phase 1, compression. 2026 to 2028, SPY slows. Commodities strengthen. The ratio drifts from around 9 towards 6 to 7. Phase 2, volatility. 2028 to 2030, countertrend rallies begin to appear in equities. Silver consolidates. The ratio oscillates between 6 and 8. Phase 3, stabilization. 2030 to 2032 supply begins to respond. Inflation normalizes, equities adapt. The ratio rebalances toward 8 to 9. Section 5. What this is not. This is not a global financial collapse. This is not a permanent end to equity dominance. This is not a one-way commodity moonshot. This is a cycle. And cycles mean reversion is always waiting on the other side. Section 6. What would invalidate this? 3 things break this thesis. 1. An artificial intelligence-driven productivity surge. Equities re-accelerate. SPY outperforms again. 2. The energy shock fades quickly. Inflation collapses. Commodities lose support. 3. There is no real capital expenditure, follow-through, a narrative without physical build. Demand fails to materialize. If those things happen, the ratio does not compress to 5 to 6. It stabilizes higher. Section 7. Bottom line, this is not about betting against stocks. It is about recognizing when something else is moving faster. The 2026 to 2032 window is not a collapse era. It is a rotation era. And in that rotation, equities slow, commodities rise, silver leads. The result, a controlled compression from 9 to 6 before the system resets and the cycle begins again. Flint West signing off.